shape our future. We came to feel the need for
You're watching TBPN. It is Thursday, April 3rd, 2025. We are live from the Temple of Technology, the Fortress of Finance, the capital of capital. This show starts now. We have a great show for you today. It's a terrible day in the market. Stocks have plunged. The dollar sinks after Trump's tariff blitz. The NASDAQ down 4%. S&P down 3%. Dow Industrials plummets 1,300 points. Bad news, but we're going to take you through it. And it's a little bit of a defense day, a little bit of a manufacturing day. We're calling it America Day. America
That was
Day.
the best word we could find for it.
We got a bunch of people joining the show. We're going to kick it off with Chris Power over at Hadrian. He has been beating the drum on American manufacturing. A lot of people thought he was crazy, thought it could never be done. Now he has a pretty sizable advantage. It's kind of crazy to watch. So excited to hear him talk about what the tariffs mean for his business, what they mean for other businesses, and break down how he's taking advantage of the new tariff regime. Then we got Delian and a ton of other defense investors.
We got some absolute dogs, John.
We also have the CEO of Plaid's coming on, talking about the fundraise that just dropped today. And of course, Scott Wu from Cognition is coming back for his second TBPN appearance.
And this is a guest record for us, John. I think,
it is.
Do we have 10?
I think we got 10. It's all in a hard day's work. JD Vance chimed in on the tariffs. He says, we need change. He has a quote here. He went on Fox and Friends, says, a lot of people have gotten rich from American companies moving overseas, but American workers have not gotten rich. And frankly, American companies have not gotten wealthy from increasing growth of foreign competitors manufacturing overseas. And so this is kind of the trade-off. I think we'll go through this again and again and again. But most economists would say that these tariffs are net harmful to humans or like the global economy. But of course, there are always winners and losers within these. Whenever these rules pencil out. And so, yes, Nike is getting hit really hard. They manufacture abroad. They sell to Americans. They're going to be hit particularly hard.
Yep.
But if you've been running a business that's making shoes in America and the only benefit you had was just you'd throw the Made in America logo on there and hope that people bought them, well, today you have a serious economic advantage. And so you're probably pretty happy and you're a winner. And Trump and JD seem to be saying, that's who we're speaking for. That's who we're representing with these. There's also this argument that over the long term, this will be better for America. Maybe this is even better for humanity as a whole. We're going to hear from various people, hear them out and see what they have to say. I think you and I were talking about this when we were working out this morning. Just that, I'm not entirely black-pilled on these. I'm also not entirely, we're in a golden age. A lot of the timeline seems to be much more split than we are, which is kind of odd. I mean, I feel like I felt
it's one of those things. Nothing is going to ever be as bad or as good as you think it is.
Yes,
right?
But on my point, it's like I experienced the Studio Ghibli moment very much in tune with the timeline. Like the timeline was like, this is the greatest thing ever. And that's what I felt. I was like, this is the greatest thing ever. I'm having so much fun. I'm in tune with it.
Yeah.
And then as the mood shifted to like, what is the meaning of this slop? Are there negative consequences? I was engaging with that too. And I was interested in those arguments. And I don't know if I agreed with all of them, but I was here for it. And with the tariff stuff, I feel a lot more split, and a lot of the hot takes that I've seen, I haven't been like, oh, this is my belief. Like this is now my take.
It's one of those
we gotta
things we're
dive through it.
clearly running an experiment
Yep.
on the economy.
Yep.
And we haven't seen the results yet.
Yep.
So it's dramatic.
Yep.
It's thrilling. It can be scary.
Yep.
But
I mean, it's
we're
the
going to find out.
largest. It's the largest drop in the stock market in more than 5 years.
Since
2
March of
points.
2020.
Yeah, since COVID. And at the same time, I remember those drops, and they were more significant and more scary and crazy, in my opinion, because there wasn't as much signaling going into them.
Yeah.
Like, this is very much a human decision that could be reversed, whereas COVID felt like something that couldn't be just,
Yeah.
oh yeah, actually we're changing course, and so the stock market should immediately go up. It wound up going up really quickly and bouncing back.
Well, yeah, and the wild thing is the S&P 500 is up 4.3% over the past year.
Mm-hmm.
So we're still
over the past 12 months.
Over the past 12
but
months.
It's down
Yeah.
this year, right? This year's not been good so far.
Sure.
Because we had the Trump pump at the end
it's
of
down
2024.
4% over the last 6 months.
Sure.
And 7% over the
Yeah.
last month. But for the
Yeah.
prior 12 months, it's up.
But just
12%.
this one move wiped 2.7 trillion in market cap off of the Dow Jones and the U.S. market broadly. And I think that what JD is trying to say is like, yes, that the 2.7 trillion was eviscerated and eliminated from the market caps of these companies, but we hope that more than 2.7 trillion is distributed in the forms of better and more high-paying jobs for Americans. It's an experiment. We'll see how it goes, and we will hear everyone's
Interestingly, Nvidia is down almost 7% today, even
there's a
though
tariff on Taiwan.
Semiconductors are excluded.
Okay.
So probably a smart exemption, but
I mean, a lot of these things
NVIDIA
have
feeling the
kind of second-order ramifications where a company that does business abroad is going to be more conservative, so they might buy less GPUs because they're like, you can play all this out to a lot of goods that are Chinese are bought on Meta, and so maybe Meta makes less money because there's people less advertising less e-commerce products because e-commerce is hit so hard by this, and there's just a whole bunch of different knock-on effects. So very complicated, but Max Meyer had a good, what is this? The Norman Rockwell painting of the man standing up, saying something contrarian. He says, putting 17 to 34% tariffs on high quality industrial machinery from Japan, Germany, and Israel, Holland, etc., will hurt American reindustrialization and make it more difficult to operate factories and produce goods in the United States.
Hard to argue with this.
We got to talk to Chris about this because he buys the Hormley like CNC, the 6-axis thing that they have like copy pasted 25 times in their massive facility, and I'm sure the prices of those machines are going to go up. But maybe there will be a carve out at some point. Again, this was just one of those like, here's how we're thinking about it. A lot of it did go into effect very quickly, but all this stuff is always up for negotiation. It's the art of the deal, baby. This was a funny one. From AF Post. So apparently Trump has levied a 10% tariff against the Heard and McDonald Islands, which are inhabited only by penguins. And so if you're a penguin in the McDonald Islands, good luck selling goods to America.
Penguins. I mean, because
it's going to be 10% more expensive.
The traditional legacy media has taken a victory lap on this one. USA Today says penguins, seals, and other wildlife, only inhabitants of 2 islands, hit with Trump tariffs. NPR. I mean, Trump's tariffs are so far-reaching; they include several remote, uninhabited islands.
I'll come out and say
but
it.
Hey,
I will say
if you're Switzerland and you just got hit with 31% tariffs, maybe we'll see Rolex move some manufacturing out to the Heard McDonald Islands.
Yeah. I mean, I think that it's a little bit edgy to say, but penguins
Maybe
have been free riding on American hard work for years, and they got to pay their fair share. So if you're a penguin, get ready to pay some taxes. The External Revenue Service is coming for you. Anyway, very, very funny story. I liked Atlas Creatine Cycle. This is a great one. Get ready to learn how to put together iPhones, buddy. I love it.
I can't wait. Funny. I can't wait. The thing is, if you can put them together, if I could know how to put this thing together, I could also know how to potentially take it apart.
Yep.
And then I could swap the battery out every
day. That's why they outsource manufacturing. They don't want
they don't want you to replace your own battery.
Yeah. I get it. This is a good conspiracy theory.
Yeah.
Like that.
So we go through some of Joe Weisenthal.
Yeah, Joe Weisenthal dropped a beautiful blog post in the iconic orange Bloomberg a font because he, of course, is delivering his newsletter, not just through email, but also through the Bloomberg terminal, as any self-respecting financial journalist should. We should really start syndicating on the Bloomberg terminal. That would be
absolutely
ideal. I don't know what it takes, but we got to make it happen. He says, once again, I'm just going to list random thoughts that are going through my head right now. I want to start with Nike, actually. At the time of this typing, the stock is down 14% pre-market. As far as I'm concerned, Nike is the perfect specimen of American capitalism. The profitable design work is mostly done in the U.S. The manufacturing is done in countries like Vietnam. And the whole brand exists as it does because the U.S. is a global powerhouse for exporting culture like star athletes. It just makes perfect sense for the stock to get nuked like this, as both its basic business model and the American brand values get trashed. Other American apparel brands like Lululemon and Deckers are similarly getting clobbered this morning. Speaking of Nike and Vietnam, in his chart book today, Adam Tooze notes that 50% of Nike's products are made in Vietnam. And of course, the Vietnam shift, Ryan Peterson pointed this out, that a lot of companies were trying to be proactive about relocating from China. Also, manufacturing in China has gotten more expensive.
That wasn't just tariff risk, that was geopolitical risk as well.
And just economic factors in China, as China has
gotten more skilled.
Gotten more skilled. Like it's more expensive to manufacture there. So stuff has moved. AirPods are made in Vietnam, famously, and that there are 500,000 people in the country working for the at least 155 factories that make Nike goods. Now we're slapping massive tariffs on them, but the question is, to what end? Do we think there are hundreds of thousands of people in the U.S. eager to work in sneaker and T-shirt factories at the wages that sneaker and T-shirt factories pay? T-shirt factories pay? Are there people eager to work in sneaker factories even at good wages? Do we think that the U.S. has the level of robotic capability to replace these factories without having to hire a lot of workers? And if not, what is the administration trying to accomplish? I think the steel man here is like there's a learning curve to the robotics capability where if you don't have the facility in America at all, it's very hard to get the reinforcement learning data to train the robots. And so yes, it makes sense to potentially, in the very long term, if you're super AGI pilled, you should overpay for human training data, essentially. And yes, maybe those, maybe because of American working conditions, the output would be lower, the prices would be higher. But if the tariffs lead to a situation where you're willing to take that trade, that puts us on the learning curve to develop humanoid robotics. Again, I'm just steel manning here. I'm not fully convinced of that.
I think broadly, and this is what I'm hoping to get from a number of our guests today, is for America to reindustrialize, we need to lead with innovation, right? We don't have the skilled manufacturing labor base that is going to allow us to onshore all this stuff overnight, even if you could immediately snap your fingers and have the facility. So it needs to be innovation led.
I heard a very hot take at some sort of reindustrialized conference where someone was saying, like, I'm extremely bullish on American manufacturing, but I don't think it's ever coming back. I think we're going to rebuild it with robotics from the ground up, and we will be a manufacturing powerhouse, but it's not going to be American labor led. It'll be innovation and technology led. And that's an interesting, that has its own problems you got to grapple with, but I thought it was interesting. Anyway.
And to be clear, that still creates jobs because somebody needs to oversee the facility, and it's not you're not going to have end-to-end autonomous factories. For
OpenAI employs thousands of people.
OpenAI is still hiring software engineers. Same with Anthropic.
And you could imagine a lot of different higher leverage operations where you're puppeteering 10 robots at a time and doing teleoperation. A lot of interesting paths to making American manufacturing great.
So he says.
You want to keep going on this? We have 2 minutes.
Okay.
I was going to move on to Scheel. He says $1 was worth €1 at the beginning of the year. The dollar is declining in value, now worth 90 euro cents. Your European summer just got more expensive.
Well, hopefully for the VCs that were planning trips, they can get another fund closed before then and just make up for it with management fees.
Should we talk about Jeremy Tsai? Very successful entrepreneur who runs a company that the whole plan was direct from the factory to delivery to American consumers. So why buy the Hermes bag when you could buy an identical bag from a facility that was built in
it's even less. Hermes is maybe not the right example, but it's like a
luggage and stuff.
Restoration hardware towels.
Sure.
We'll give you the same towel or the same quality of towel for a fraction of the price.
And so he says consumer prices are built with percent targets, not absolutes, meaning cost increases are exponential. If the cost is 10 and the price is 50, to maintain product margin, a $1 cost increase equals a $5 price increase. A $5 cost increase equals a $25 price increase. These are multiplicative. And so he's arguing that this will lead to consumer inflation, which of course is a risk. Taking the other side of this argument, Sean McGuire, he says that this is the first long-term thinking president in my lifetime. He's obviously supportive, and it seems like he's excited about it. I'm excited to talk to him about how he's processing this and playing.
Yeah, and this is playing into short-term pain, long-term gain, and that's what you got to be oriented around if you believe these are good policy decisions.
And Palmer Luckey came out in support as well. He said, unprecedented embrace of protectionism, they say. No, reciprocal tariffs are the opposite. The whole point is to encourage free trade rather than lopsided free trade we currently have with so many countries. It's very simple. If they charge us, we charge them. And so this would be an interesting long-term play. What if this triggers a reduction in tariffs and Trump says, yeah, we're going to stick with reciprocal. And as you lower your tariffs, we'll lower ours. And all of a sudden we go to a truly free trade. That would be a very interesting outcome. I don't think a lot of people are expecting that or pricing that in, but I think Palmer's saying that could be a potential outcome here. Anyway, we got Chris Power coming in the building. I wanted to play this video first. Do we have the video?
We're cultivating Chris Power.
Yeah, we're cultivating Chris Power in America. I wanted to hear Howard Lutnick talk about the tariffs and give us a little breakdown, and then I think Chris could do some analysis for us. Let's see what else is going on. There's some more posts here. Tyler Cowen did not love Liberation Day. He said Trump's reciprocal tariffs impose hundreds of billions of dollars in new taxes on Americans without public congressional input. So arguing that this should not come from the executive branch. They're based on secret calculations. Okay, I think we got the video. Let's play it on the show now.
What happened to the world is the global governments have backed taking our factories away from us. I mean, there's nothing about Taiwan that they should be making semiconductors. There's nothing about Korea. They should be making all of the appliances and the electronics of the world. What's happened is they had a policy of their governments to let's back our companies and let's take this business from America while America's not paying attention. So our factories went overseas. But what you're going to see is the most modern factories of the world come back here. We are going to start on one of the great training programs of the world to teach our employees what tradecraft is, how to build factories, and not the old kind of factories. I'm talking the most modern, the most high-tech factories. When you say HVAC, what we're talking about is cooling a high-tech semiconductor plant, probably one of the coolest jobs you can have, right? Mechanics, fixing robotics. That's what's coming to America. The coolest factories, the highest tech factories, they're all coming home, and Donald Trump is bringing them home, and he's going to create a renaissance of high-tech manufacturing in America. That's why America's going to win.
He's Newsmaxing. He's on Newsmax, and he's given the pitch for why these tariffs are good. We're going to hear from Chris Power, who's in the Temple of Technology, talking about these tariffs. How you doing,
He's
Chris?
back.
We're cultivating
great,
Chris Power
guys.
today.
I would argue that we are sitting in a high-tech factory, but it's nice to see you on the show again.
Fantastic. How did you process the news? Give us the high-level breakdown.
I think it's incredible for all manufacturing businesses, and I think the pushback you're seeing from people who've got crappy e-commerce businesses built on the backs of Chinese Temu textile facilities are the problem. I mean, what happened since the 70s through the 90s is we offshored all manufacturing to developing countries because we didn't want to deal with it. And all great power conflicts hang off the back of commercial manufacturing being able to pivot to defense when it really matters. And Lutnick is absolutely right. And what people miss is China especially, but all developing countries are not just cheaper in labor. They've been actively subsidizing, basically to make it free, energy, capital, equipment, labor. And when they export manufactured goods to the US, often they are, they're getting refunds of the government of 30 to 50% through this kind of export tariffs. So this is not, us raising tariffs unfairly. It's just leveling the playing field for what's already been happening. I mean, often what we see with competitive Chinese prices for CNC machining is that the cost of the raw material we can buy is more than the part that Chinese selling to a US manufacturer. And that's just all through subsidies, right? Of all these key areas and these export tariffs. And what that's done to the country is, you can think about this as kind of like a balance sheet, right? It's kind of like what DeepSeek is doing. That obviously doesn't cost a cent per query. They're subsidizing it so they draw the consumer into that platform and they gain all the leverage over OpenAI. It's the exact same thing with manufacturing. And then what happens over 3 decades is you offshore all the skills and the capital equipment to developing countries. And then when we go into a conflict, they've got all the manufacturing capacity. So I think this is a very accurate response to the forced deindustrialization of the US through aggressive trade policies from China over the last 40 years. And this is just barely making it even. Now, yes, are some goods and services going to be more expensive? 100%. What this is going to cause, though, for American manufacturing, and bear in mind, I would say 90% of what American manufacturers buy, even if their revenue is on the NASDAQ, is offshored. So we're flowing 90% of the volume from NASDAQ revenue or Nike shoes to developing countries and paying them to do our stuff, and then they're subsidizing it by 50 or 60%. So what you'll see from here is this forced reindustrialization of the US, because now we're going to have to build more factories in the US, which is going to cause this now huge boom in manufacturing skills and talent to serve those factories. And because our skilled labor in the country is aging out, because, we told all the kids in the 80s and 90s that if you didn't have a 4-year college degree, you're an idiot, is now we have to build factories that are highly advanced, use a tenth of the people, and are exciting for kids to get into. And it's not about replacing jobs. It's just going to be different jobs. You're going to be a robotics technician. You're going to be running 10 machines at once versus doing absolutely everything with your hands. And this is the way we prepare for, 2029. And this is the strategy, right? Is you tariff everything. We bring back manufacturing to the US. In the next 4 to 5 years, you're going to see the greatest reindustrialization of the country, so that we actually have the skilled trades on shore, so that, God willing, we don't get into a conflict. But if we do, we might have a hope of doing it, because you can turn a dishwasher facility into a missile factory pretty quickly. And I think everyone who's kind of complaining about this is kind of part of the problem where, we don't want to deal with manufacturing here. My Temu, my shitty wrapper over Temu and my e-commerce business. Yeah, you're part of the problem. You've been trading dog and cat pictures on the internet for 30 years, and we gave away the farm to China. What are we talking about? This is a real country. We're going to make stuff in America. We've been pushing through this through Nair and obviously through Hadrian for a while, and I think the administration has got it absolutely correct. The second thing I think people miss I've heard a lot of complaints about targeting Vietnam, targeting Taiwan. What people miss is a lot of the Chinese manufacturing volume, so they get out of the, kind of export controls, is they just ship it across the bridge to Taiwan and then sell it to an American company. It's kind of like fentanyl coming from China through Mexico. So this whole cluster of Southeast Asian manufacturing, often behind the scenes, it's like a Taiwan CNC is kind of a dodgy wrapper over Chinese CNC, to use the tech analogy. So I think, yes, it's going to hurt some industries that have based their business on selling high-priced goods to consumers while they've got a cost of goods of $5 in China or Vietnam. Yeah, 100%. But for the country, it's an incredibly good thing. And the jobs in the Midwest and in places like Ohio are going to go through the roof, because we're going to have to reindustrialize based off this balance of trade equation that's just massively correct. I think it's an incredible thing for the country. It's certainly an incredible thing for the business. And I can't say enough good things about how seriously the administration is taking the reindustrializing of the country, and not through subsidizing companies. They're just recreating the dollar cost of the market to incentivize all these global companies and American companies to invest in manufacturing, because now the price equation is such that people need to buy American, and then let the private markets invest behind that market signal. I think it's a brilliant strategy, because otherwise they would have had to spend $1 trillion subsidizing a handful of companies to build in America. And now they kind of get that investment for free. And you're going to see this huge multiplier effect of every 100 people who work in a factory. Great. You need a coffee station. You need support and trade services. You're going to get towns built around these factories, and more housing and more construction. And that plus deregulation is a huge boom.
What do you, in your world, obviously semiconductors were excluded from the tariffs, but a lot of industrial machinery from places like Japan, Germany, Holland weren't excluded. Do you think that kind of those kind of products should be excluded from the tariffs in order to help. Hadrian obviously purchases machinery from countries outside of the U.S. just because you have to.
We have to. I don't think anything should be excluded. We said this in the last show, is that, why does the US not make CNC machines or foundry machines anymore? We offshored it because they got subsidized. So let's add it to the stack. And, for our business, my CapEx just got 15% more expensive. But our CapEx is kind of free because we just use leverage debt and financial engineering anyway. But I think people miss the fact that, American manufacturers are somewhere between 40 and 200% higher than China, right? And we see this because a lot of our customers do source things to China and they competitively bid us if they're not forced to manufacture it in America, right? Mm-hmm. And right now we are, as a business, because we're highly automated, often 30% more expensive than China. So you add the tariff back on that, and now you've got like a $20 billion machining TAM in the US now becomes 100 because all the US companies are going, well, why wouldn't I reshore this? Because now my parts just got 50% more expensive.
Yeah.
So let's just bring it back to America,
How are you thinking about Polymarket has the chance of a US recession just jumped to almost 50%. There's kind of a narrative that like the best case here is maybe we're taking some medicine, short-term pain, long-term gain. Is that a reasonable framework to think about this? Or do you think that there's a way that we avoid any of the short-term pain other than, of course, the market sell-off today?
I think we're going to take some short-term pain, but I think that's really like, do you care about the S&P 500 or do you care about what actually underpins GDP, which is jobs in like the American heartland, who can't get food or, look, I'm Australian, right? But like, here's a great example. American farmers have not been able to export beef to Australia, haven't sold $1 of it because it's banned. We as a country, I'm saying this now, America imports $29 billion of Australian, beef and cattle products. So it's like, okay, all the American farmers are getting screwed. So I don't know, we should probably be eating American beef. Realistically though, knowing the administration, I think what you're going to see is they are forcing a very hard reset to reset the economy, which means deregulate, tariff up, rebuild the United States so we have the productive capacity. But bear in mind, the interest rate is extremely, extremely high, right now. Mm-hmm. It hasn't really been leveraged down. And inflation, and by the way, reindustrialization is a deflationary event. Yes, it might make some goods and services come up. What you'll see is like wage growth and jobs growth behind it so that the balance of inflation comes down a little bit. What I expect to happen is that everyone complains for about 3 to 6 months. And I don't know what the interest rate is sitting at now, but bear in mind, I think it's like 4 or 5% on the Fed rate. You can notch that down 1.5%, maybe 2% over the next kind of 3-4 quarters, and we're gonna get back to ZERP mode, and then the S&P will come up as everyone puts their cost of capital in the spreadsheet. So yeah, I think we're taking some short-term pain. I think the Federal Reserve and the Bureau of Labor Statistics have been lying to the American people for the better part of 2 to 3 years. I think we're already in a recession. It's just like we're fudging with the numbers and not talking about it. But realistically, no, I think the boom starts in like 2 quarters or so as the federal budget gets cut with Doge, people are going back into the economy and being productive. The tariffs come up and there's a bunch of volume and activity happening in the country that's producing real GDP, like jobs in factories. And then I think you tick down the interest rate like 1 or 2%. And I think you got 3 years of like ZERP mode of cost of capitals going down. All the valuation's going to go up. I think it's going to be a banger. We just got to like sit here for a quarter or two. It's going to be great.
Is part of the issue that tariffs and trade balances are just so complicated that it's almost impossible for anybody to fully understand, much less somebody who's just sort of passively reading the news or not involved in it? Because I've gotten messages today. I got a message from my mom, who is just basically seeing everything red, just being like, "This is bad." Yeah. And so like, there's this sense of this. People are going to have this emotional reaction to the market because it's the most like real-time indicator of sentiment. But do you think the administration could do a better job, sort of communicating? JD Vance was on TV earlier, and I think he had some pretty good comms around tariffs broadly. But do you think there needs to be better communication on why this is happening and how there might be some, it very well could have a very positive long-term impact?
Yeah, and I think they can be communicating to the American people a little bit better. I think the communication that's come out is actually pretty good. It's just that it hasn't reached many people, and you're right, they just see like stock go down, you know. But I think over the next 6 to 9 months, I think it's going to be incredibly positive, both for S&P and Dow Jones and Nasdaq, and for the actual underlying real economy. But yeah, it's like, you feel pretty bad going to the gym for the first 4 weeks when you're a little bit overweight, and then you start feeling good, and the first 4 weeks feel pretty bad because you're like, wow, this is really tough. And then you realize, like, hey, I'm just out of shape. We're getting.
And you're repping 2 plates.
Yeah, you get and then we'll be repping plates. Jay Powell will drop the fucking hammer, and we'll be deadlifting.
Jay Powell's the creatine on top. Exactly.
How has your phone been ringing off the hook from investors that maybe passed 2 years ago saying reindustrialization is not going to be a thing? Anybody capitulate
I have no
yet?
comment on whether or not we're getting calls from customers trying to resource massive volumes from China and accelerating our factory build-outs. And I also got to drop in a minute, and I'm not going to make any comment about future or potential fundraisers in case the SEC whacks me on the head with the bad hammer.
Yeah, it's been great having you. We got to have you on more regularly to kind of track this story as it develops. This is fantastic. Thanks so much for taking the time to join. And
you're welcome,
great
guys.
Having you on.
And thanks for having me back to capital to capital.
Keep cultivating Chris Power over at Hadrian. We'll talk to you soon. Bye. In the meantime, let me tell you about Ramp. Time is money. Save both. Easy to use corporate cards, bill payments, accounting, and a whole lot more, all in one place. Head over to ramp.com. And we have a Ramp investor coming on the show next. Delian Asperuhov is joining, partner at Founders Fund, co-founder of Varda. He'll be joining.
Many people have called him a global expert on tariffs, trade wars, real war. The list goes on.
Yeah, he's really dialed in.
He's dialed in.
He's also an investor in 8Sleep. Nights that fuel your best days. Turn any bed into the ultimate sleeping experience. Go to 8sleep.com/TBPN for an 8Sleep.
Do it.
Get an 8Sleep.
Oh, I put up.
It's fantastic.
I put up 100 last.
You did?
Time.
Oh, you're killing it, Jordy.
I really.
Well, we got to ask. We got to ask Delian how he did. Because I know he's on one, and I know he hasn't been traveling. I got a 95. I was a little bit low on time.
Proof of work. Look at this.
I got the 80. The
95.
95. You got 100?
100. Yeah.
100. Oh,
look at this. Look at this.
I was like a hair's breadth away. If I'd gotten 2 more minutes of sleep, I would have gotten 100. 2 more minutes. But had to keep the alarm at 5:40 a.m. Got to get up. Got to get in the gym. Got to start repping.
Wait, you get up an hour after me.
An hour after you, yeah. But you go to bed 2 hours before me, so it works out.
True.
Anyway,
somebody's got to be up late just texting to get 10 guests on a single episode.
Yeah,
it's not easy.
Exactly, it's hard work. Anyway,
one thing I wanted to ask Chris that we didn't get to was, what does Nike do here? Do they figure out how to make shoes in America? I know they have probably some American-made shoes, but it's got to be less than half a point of their revenue.
Okay, Delian is out. We just messed up the invite, got double booked, but let's go through more tariff reaction because I want to talk about Tyler Cowen's Liberation Day post because I think he gives, obviously Chris Power at Hadrian lays out a very reasonable and bullish scenario. And as someone on the ground building a factory, it makes a ton of sense. Like it's his thesis that he's had for years.
And the thesis wasn't actually predicated on massive global tariffs. Right?
No.
It was more so predicated on we should make things in America, specifically products necessary for defense manufacturing.
Yep.
Right.
Yeah.
Aerospace.
Yeah.
Sort of super critical industries.
But it is interesting to hear the other side of this, kind of the more buttoned up economist take. And so Tyler writes that markets have responded accordingly with the Canadian currency hit especially hard and S&P futures sinking immediately. And we saw the market actually did sell off quite a bit. I'm not exactly sure where it is now. Maybe you can hop on public.com and check that out. Investing for those who take it seriously. Go to public.com and sign up. Because I actually would love to know how is the market trading during the day? Obviously we saw it opened down 5% and some stocks were hit very hard, but I'd like to know know overall how things played out.
S&P is down 4% today.
4%. So a little bit of a pop off the bottom, maybe bouncing along the bottom.
NASDAQ is
the dead cat bounce, as they call it, potentially. It's interesting, be greedy when others are fearful, potentially, or maybe get everything out while you can. Who knows? We don't give you financial advice here. We just yap and you make up your own decisions. Anyway, with President Trump, one never quite knows what one is going to get, says Tyler Cowen. So any assessment needs to be provisional. But that is a big part of the broader problem, high and persistent uncertainty about the basic rules of the game. And this was the question that I was going to ask Chris if he had a chance to stay on longer was, okay, I understand that you're excited about the current like what happened yesterday, the breaking news. But
and to be clear, it's phenomenal for Hadrian.
Of course. Like
I'm sure they will have more customer inbound today
100%
than probably any other point
100%
in history.
Because I mean, they're a young company. They are using American labor. They're based in California. Like things are expensive. There are a lot of places where even though Chris is great, he's a really great founder. Like there are just structural elements that make his product less price competitive, and he wants to get there with software and automation and eventually get to a place where he's completely price competitive. He's always differentiated on pace of play, time. If you're in Southern California building a defense tech company
or an aerospace
company, and you need a part tomorrow, Hadrian will stay up all night, get it done, and you won't have any of the shipping times. That's been the key differentiator. But now it seems like he could potentially be more price competitive. But the question that I wanted to ask him, and what we were talking to Ryan Peterson about yesterday, was, is what's going to happen with this Rose Garden and this reciprocal tariff framework? You might have seen some of these like mathematical formulas floating around. Like, is this enough of a framework to bring confidence to the market? Because there's a huge difference between, it's 20%, it's bad, we're ripping the Band-Aid off, but you know that this is the end of the story, it's 20% forever. You can plan for that, you can update your Excel models, your financial models, you can plan for that. Versus it's 20% today, then it's 10%, then it's 15%, then it's 50%, then it's 10%. Chaos and uncertainty.
This is like two people pointing a gun at each other, sort of waiting. no more. Yeah, the James Bond day is over. Bond day is over. Put the squirt gun down. And anyways, it's like who's going to sort of make a move first?
Who's going to blink first? Yeah. And what's interesting is that I think that this is potentially enough of a framework to understand where, okay, all I need to do is monitor, what is the reverse tariff? How much would it cost for me to import my product to the country that I'm making it in? And then I can expect that will be the tariff that goes the other direction. The question is just like, will these tariff rates stick around for years, for 4 years at least, or maybe 8 years, who knows? Yep. Or is this going to be something where literally every single one of these countries comes to the table and starts renegotiating immediately, and we're seeing tariffs jump around all over the place week to week, and we're seeing, turns out like Switzerland came to the table and they cut their tariffs so that now Switzerland rates are lower, and like all of these different things happening. Like you imagine that there's going to be big discussions between China, Vietnam, like the major countries, but it could be all of the countries. And so that uncertainty, I think, is something that businesses really, really detest, because it makes it really hard to plan, especially things like CapEx, right?
Yep. So this is a good line. Like a game show host, Trump announced a series of tariff rates on many of America's major trading partners. How did he come up with the rates? It seems by a crude formula. A given nation's trade deficit with the U.S. divided by the nation's exports to the U.S. There's a base rate of 10% to be applied to the UK, Costa Rica, and some other friendly nations. For India, it is 26%. For Japan, it is 24%. And for the European Union, it is 20%. The most incomprehensible are those on Vietnam. The new tariff rate is 46%. Sri Lanka, 44%. South Korea, 25%. Cambodia, 49%. And Taiwan, 32%. Are those not some of the major countries we are expecting to hold China at bay? Do we not want Chinese manufacturing to end up moving to those in other countries so we are less dependent on the Middle Kingdom? What could possibly, and again, Chris was highlighting that, some of these countries are basically sort of producing goods and then passing them through China and
yeah. He was making the argument that it was that some of these countries are kind of fronts. I would be skeptical about the idea that like 80% of what we import from Taiwan is Chinese made at the source. But I think his point is probably correct that there is some amount of product passed through.
He says, what could possibly justify the fact that Taiwan, which is a U.S. ally being threatened by China, now faces almost the same tariff as China, 34%?
That is a very, very good question.
Trump calls these reciprocal tariffs, and the claim is that we are taxing foreign nations at only half the rate they are taxing our imports. The numbers are illusory, however, some of them apparently made up. Brazil at only 10%, and others counting a VAT as a net tax on American imports, which it is not. In any case, we will be moving into a future with higher prices, less product choice, and much weaker foreign alliances. The tanking of the stock market and other possible asset price repercussions may tip America into recession and increase joblessness. This is perhaps the worst economic own goal Tyler has seen in his lifetime. I cannot think of any credentialed economist colleague, Democrat, Republican, or independent who would endorse it, and I haven't even mentioned the risk that some foreign nations will retaliate against American exporters, damaging our economy all the more.
Pavel Asperuhov had a great tweet about this. He said, texting all my close friends to go F themselves so I can learn to be more independent. Short-term painful, but there was literally no other way. And it's a good take that it's like, we're not making a lot of friends with this policy, folks. This is going to be rough.
Yeah. And one could argue that if you truly are America first, that means putting America above our even people that are allies. Pavel's point is that at some point when he was starting his company, he basically had to tell his friends to F themselves. So he's joking there, but
no,
of course.
But yeah, there was a little bit of that for sure. I think this gets to this interesting idea of like this America First stuff is not just people think of it as like you're either like a nationalist or a globalist, right? Like you're either like you should be able to manufacture anywhere, doesn't matter where the jobs go, have every company be completely global, doesn't matter where the jobs are. And then there's the other side, which is like everything needs to be made in America, and like I don't care about Canada, I don't care about the UK. But then there's a pretty wide middle here where you have something like the Five Eyes and like all the different allies between. I mean, we sell nuclear submarines to France, right? Like they're a very, very close ally. And this is what Alex Karp talks about at Palantir, like the idea of the West and the idea that if America goes it alone and China builds a bunch of allies through the Belt and Road and not only has more than 1 billion people, but also has a much larger economy when you bundle them together with Russia, Iran, all of Africa, a bunch of other countries, North Korea aside, and like tons of other countries are like, well, if partnership with America is off the table, all of a sudden partnership with China seems a little bit more reasonable, then America could get really, really smoked, right? And so there's this question of like, how important are these alliances? How important is it to have friends in the global community? I'm obviously all for making American jobs viable and lucrative and fantastic. But I mean, there is a cost to some of this that I think Tyler's right to point out. So where did you fit? Where did you leave off at damaging our economy all the more?
Yes.
Okay, so you might think there is something to be said for a reciprocal approach to tariffs. Usually it consists of cutting off your nose to spite your face, but it can sometimes work. It requires a president and Congress who is predictable and trustworthy. That's not how foreign nations view the current administration. If you're wondering about the trade treatment of Canada and Mexico, that remains cloaked in mystery. The threatened 25% rate on those two nations from earlier in Trump's term violates the NAFTA redo that was negotiated by Trump himself. Why trust in reciprocity here? Oh, and did I mention that tariffs, according to the Constitution, are supposed to be that will in turn signal a willingness to negotiate again, and we will be in for yet another round of tariff musical chairs. But it's not a game. There is real money and therefore real lives at stake here. And so he was not a fan. And I think that the tariff musical chairs could potentially be the bigger issue and the bigger fear here.
Bill Ackman, the activist man, posted earlier, sometimes the best strategy in a negotiation is convincing the other side that you are crazy. And it is very possible that Trump is being very effective there. Logan had an interesting point. He's
Oh,
it was basically a meme that said, "I'm adding tariffs," and it's a guy with a "Make America Great Again" hat that says, "This will create jobs." Trump, and then it's, "I'm removing tariffs." He goes, "Art of the deal. I'm adding tariffs. This will create jobs. I'm removing tariffs. Art of the deal." I
mean, it sounds really crazy and copy, but like, how many times have you been in negotiation where there's back and forth? Like, this does actually happen in real life. Like, it sounds stupid when you say it that way.
Classic negotiation strategy is to start and just be completely extreme, and then know that you maybe
on negotiation strategy, do you buy into that philosophy? I have found, and a lot of negotiation consultants that I've talked to have kind of advocated more for come in with something that's first build vision, make sure you're talking to the right decider, like the person who can decide, build a really clear vision of what you want the partnership or the deal to look like, and then come in with something that's reasonable that you would accept, never bluff, and get a deal that actually sticks instead of just wildly oscillating, saying, I think their budget's $100, so I'm going to open with 300 and be prepared to negotiate down. That's actually like a harder way to get a deal done. But I don't know. What do you think about negotiation generally?
No, strategy. Aim for deals that I think are fair and great for all parties involved.
Yeah.
And then I'm very explicit if I feel like it's drifting into a territory where it doesn't make sense.